So let's bring in HSBC, Australia's chief economist, Paul Bloxham, a former Reserve Bank economist himself. Paul, I guess after that monthly inflation data last week, there was no real surprise that the Reserve Bank right now is saying it just wants to wait and see what data turns up next.
It certainly makes sense. And it's not just the monthly CPI indicator that gets us to that position. I think we can confidently say the Australian economy is looking in a pretty good spot for the RBA. You know, in terms of the RBA's mandate, inflation is in the target band. The unemployment rate is at full employment and it's tracking sideways. And growth is also in a modest upswing. The consumer is reviving. There's a bit more spending going on in the economy as well. So I think, you know, I've been arguing at least that the economy is in about as sweet a spot for Australia that it's been, as far as the RBA is concerned at least a decade now. We haven't had a period where we've been on target inflation, growth in an upswing, and at full employment all at the same time since 2014 or 2015. So you know, for the RBA to be comfortable and not really wanting to do anything today and wanting to be fairly agnostic about what's coming next makes sense to me.
So the one thing about this is that the Reserve Bank governor, even though a lot of people would cheer on future interest rate cuts, the reality is that's either inflation too high, rather too low, and so they can continue to cut, or on the other hand, that you've suddenly got a weak economy. But really, you've got an economy that's starting to pick up, consumers that seem to be getting their mojo back a little bit, real wages are continuing to grow. So again, Michelle Bullock today basically pains to say, listen, it's good news that consumers are spending. It might even be good news that we don't have to cut interest rates in the near term.
That's right. That's definitely how I would read the situation in the economy at the moment. It may be good news that the RBA doesn't have to do anything. I think the only other caveat to be pointing out would be, well, if we could get a little bit more growth out of the economy, the RBA would probably be prepared to tolerate that as long as they can be assured that inflation is going to stay on target or move a little bit closer to the midpoint of their target band. And so that's the case still that remains for the possibility that the RBA might still deliver further interest rate cuts. I think the other thing to keep in mind is this is just a domestic story, and globally, and the global economy matters too. So if the global economy does deliver more disinflation or a bigger slowdown, this is the sort of thing the RBA's got a bit of scope still to react to. So our view is that it's still more likely that the RBA is going to cut interest rates a bit further yet than they're not going to. But certainly where we are right now, I think the RBA looks as though they're pretty much in a sweet spot.
OK, so given the sweet spot, when do you anticipate a cut in rates, if there is one to be coming?
Well, the next one is going to possibly be in November, but that's going to hinge hugely on what this next CPI print looks like. So those inflation numbers that come out in a few weeks' time on the 29th of October are going to be the thing that everyone needs to watch carefully for working out whether the RBA is able to deliver that November cut. And themselves, the RBA said today, well, the monthly indicator suggests maybe that'll be a little too high. But as we all kind of know, and we've been writing a lot about, and the RBA even said today, that's a noisy indicator. It's pretty volatile. Hasn't been a great read of what happens in that quarterly number in the last few readings. So we'll just have to see where we stand. Our view is that we may get one more cut before the end of the year and one more early next year. I think the risk is that we might get a little less than that.
OK, so what did you make of the Reserve Bank governor's warning today that just because inflation has come back down to the band, the prices have not come down to where they were before the inflation really took off in Australia? I mean, that to you and me makes absolute common sense, but to an ordinary person it might not, because it also seems to me that the ordinary person who might have been feeling the pinch has to wait for tax cuts to kick in, for the interest rate cuts to kick in, and then for their wages in real terms to start to rise.
Absolutely. So this is why inflation is so pernicious, and we really want to make sure that we don't get in an environment where inflation's running too quickly, because once inflation takes off, it lifts prices, as we all know. That's what it means. But you don't tend to get prices to come back down again. Once they've ratcheted up higher, they don't tend to come back down. And part of that is that the RBA themselves don't target the price level. They're not trying to get the level back down. They're trying to get inflation to track at a certain rate, 2 to 3% in the medium term. They don't, if they were to try and target the price level and get prices right back down, they'd have to push the economy into an even bigger downturn to make that happen. That's not the way this works. The RBA targets inflation. So the governor has been trying to make it very clear that the price level's gone up quite a lot, 25% odd in the last few years. It's not coming back down. The price of things is not going to come back down. What we should expect now is that the price of those things will rise on average across the basket by only 2 to 3%, which is the RBA's target. And that's the RBA trying to communicate to the general public, that's what they should expect to happen.
There was one other thing which a lot of people might have missed in the statement from the Reserve Bank today, and that was that the Reserve Bank's Monetary Policy Committee, which made this decision, is unanimous about the decision they've made. So in other words, they're in lockstep. There's no, sort of disparate view which is sitting out there. They were actually committed as a group to the decision to keep the rates on hold.
It was interesting because normally this is how it's worked in the past, where the RBA board comes to a consensus decision. But now that we've got a new monetary policy board, what they're doing is actually voting. And there was an occasion a couple of months ago where they voted and there was a split vote as to what they would do. And so now, for the first time, they're communicating that actually this was a unanimous decision. They all decided the same thing. Now, I don't think it's particularly surprising that they all decided the same thing because, as I've described, growth's in an upswing, the unemployment rate's steady at full employment, inflation's in the target. There really wasn't a case today to do anything with monetary policy. But yes, it is interesting that the board was unanimous in this decision.
I'll tell you what, Paul Bloxham, Chief Economist at HSBC in Australia. Always good to get you on these days, Paul, and get your insight, and many thanks for it today.
Thank you.